All right, so we just had a massive quarter from Aritzia, and it's funny because around 8 months ago, I put out a video on this company speaking on how it's been a long-term position for me. I believe I've owned this, I've been in and out of it since 2018, and it kind of does have a soft spot for me because it was one of the first ever stocks we highlighted over at Stocktrades Premium. I think it was along the lines of $17 a share. Now, as always, everybody, Aritzia has been a very heavily covered company over at Premium. If you want to join Premium, I have a link in the description below that'll get you into the platform for 99 cents for your first month. I am very confident you're going to find massive value in this platform, that you're going to stick around. So I'm going to give you your first month for $1. It is probably one of the best opportunities in terms of research platforms around, but let's get into the quarter. The video was actually one of my least watched videos, least popular videos over, during that time span. So if you ignore that one, you might not want to ignore this one because this company just reported a quarter that killed it. So if we look to estimates, they were expecting around 39 cents a share in earnings and around 753 million in revenue. When we actually go to the quarter, they reported revenue of 812 million. I'll zoom in a bit here. Revenue of 812 million and earnings of 59 cents. So yeah, right here, 59 cents per share. So we're talking about huge beats on both the top and bottom line. And the one crazy thing here is we have comparable sales growth of 21.6%. And I find a lot of people, when they were looking for fashion retailers, and I mean a lot of this comes from investor psychology, I guess, buying the dip, buying stocks on 52-week lows. They were hunting for companies like, the Lululemons of the world or the Nikes of the world, which have struggled quite a bit over the last while here. I am a firm believer that in fashion, you do not fight the trend. We had Lulu and Nike struggling exponentially over the last year and a half here, while this company was just quietly killing it. There is no doubt. So the United States revenue increased 40.7% to 486 million. So that now makes up 59.9% of revenue. And when I first started covering Aritzia, it made up around 30-some%, maybe high 30% in terms of overall revenue. And now it's nearly 60. The case for U.S. expansion when it comes to Aritzia is massive, and we can see it here. I'll zoom in a little bit on this chart too. So this is their U.S. revenue. So we're talking about a 45% compound annual growth rate since the start of 2020. Now, if we add in Canadian revenue here, we can see that it is growing at a 17% compound annual growth rate, which is still exceptional. Don't get me wrong, but I mean, this company's story in the US right now is huge. It is absolutely huge. And the one main advantage it has over a company like Nike or over a company like Lululemon is it does not have the scale yet. When we look to boutiques for Aritzia, I believe I have to go to a quarterly basis to get they took it out. So FinChat used to have U.S. boutiques versus Canadian boutiques. But anyway, the Canadian end is effectively stalled in terms of boutiques, but the U.S. end is growing at a very fast pace. And if we look to overall comparable sales growth, we can see that this company had a big surge in comparable sales growth through the COVID-19 pandemic, and then it fell off of a cliff. And during this time period, the company was going through a lot of inventory issues that kind of worked out to be nothing more than a timing issue. I mean, you could have grabbed the company back here, in the 2022, 2023 range for like 20 some bucks a share. I think it got into the low 20s. And I mean, I'll timestamp this right now. I'm recording this late October 9th after they reported earnings. So tomorrow you will probably see this, October 10th. And I would be surprised if we did not see $90 a share tomorrow. A double-digit increase on this quarter is probably pretty appropriate. But getting back to the quarter, we have overall retail revenue increasing 34.3%. We have e-commerce revenue increasing 26.5%, and gross margins continue to accelerate. So we have gross margin increasing from 360 basis points to 43.8% from 40.2. So what this company was going through probably a year and a half ago is an inventory issue. They ended up front running a bunch of inventory during the COVID-19 pandemic when supply chains were relatively difficult. So the company couldn't keep up with the demand. That would have been back here when same-store sales growth was growing in the 30+% range. At about this time, they kind of didn't have enough product to satisfy the demand. So what they ended up doing is ordering a ton of product. And what ended up happening here, and I'll actually go to the balance sheet and show you the impact on inventories. Where would it be? Right here. So the company ended up spiking inventories during the 2022. We can see here in 2022, they were like, oh, wow, we don't have enough inventory to satisfy the demand for all of our products. So they ordered a bunch of inventory here. And what ended up happening in the back half of November 2022, we had inflation skyrocketing. We had interest rates going through the roof and sales slowed down inevitably. And a lot of people started to worry that this was the brand falling out here. So rising inventory and a lack of sales of that inventory from a fashion company always spikes the fear that the brand is kind of running out of its steam, I guess you could say. But all this ended up being was a bad timing issue. So what ended up happening is back during this area where they had to sell off this inventory. So what happens with a retailer when they gather too much inventory, they will have to mark that inventory down because especially with fashion, you have clothing items that go out of style very quickly. So they'll have to take 2022's product line and they'll have to mark it down 30-40% in order to move it so that they can bring in new product lines. So first thing this does, rising inventory, more cost to store that inventory. So that's a drag. And then the second issue would be the fact that when you have your cost of goods sold, that would effectively be the same. They're paying the exact same amount of price to make those clothes. When you have to mark them down, you're selling less, your gross profit is less, and ultimately if your cost of goods sold stay the same while your sale price goes down, your margins are going to take a hit. But we're seeing them recover here. And what else we're seeing is SG&A, so selling, general, and administrative expenses, they're becoming a smaller portion of revenue. So that actually declined from 32.4 to 30.8. So the company is getting more efficient in terms of operational expenses, which is ultimately boosting profits. So adjusted EBITDA came in at 122% above. So we're looking at 122.7 million, and adjusted EBITDA as a percentage of net revenue increased 610 basis points. So we're talking about 9% of the company's revenue is translated into EBITDA, adjusted EBITDA in this case. And now we're looking at 15.1%. Now, a lot of people actually might think that adjusted EBITDA is some sort of, obviously it's an adjusted number, but the actual EBITDA of Aritzia is actually higher than this adjusted number. So what they do is they take out leasing agreements, stock-based compensation, things like that. So this number actually, if they reported it on a accounting basis, it would actually be higher. So adjusted net income increased 184%, sits at just shy of 70 million, and we're looking at adjusted net income per share increasing 181%, 59 cents per share compared to 21 cents in Q2 2025. So we look to overall results. We're looking at a 32% bump in overall revenue. We're looking at a 208% increase in net income, 206% year over year on a per share basis. And just overall, this is a fashion company that is executing very, very well right now, while many players like Lululemon and Nike are kind of blaming the environment, the macro environment, things like that. We're just not really seeing it with Aritzia, which kind of gives you the impression that this company is executing very well. Now, when we look to the outlook, and I won't look to the quarter over quarter outlook, I don't really like looking at outlooks for the next quarter. I'm more so worried about the entire year. So we can see net revenue in the range of 3.3 to 3.35 billion. So this would be growth of 21 to 22%. Now, there was a time period where Aritzia was projecting, I think it was a few years ago, like 9% growth. So we've seen a monumental turnaround in this regard. And this does include the contribution from retail expansion with 13 new boutiques and 4 repositionings. And the one important thing to understand here is 12 of these new boutiques and 2 repositionings are expected to be in the United States. This is the main driver of this company right now, is exposure in the US market. So adjusted EBIT as a percentage of revenue, it'll be relatively the same, 15.5 to 16.5%. and capital expenditures of $200 million, but the bulk of it will be into new boutiques. So $120 million into new and repositioned boutiques. So, I mean, overall, I don't know if there's a bad thing to say. I don't believe they have the conference call yet. No, they just have the earnings. They don't have the conference call. So I can't look at the call, see what they're saying in terms of the current environment. But this company at this point in time is just killing it. In terms of valuation, I mean, we can see the company's trading at only 23x forward earnings. I mean, you're sitting there with a lot of AI plays right now trading at like nosebleed level valuations, and this company is growing at a 35% plus pace, and it's trading at 23x forward. Now, what I would expect if we do see a big tick up in price tomorrow, this multiple will go up. But then I also expect the estimates on an analyst basis, especially when we look to annual numbers, to trend upwards as well. That will ultimately lower the forward multiple. But the thing is, if we go back to the annual guidance here, so they expect adjusted EBITDA as a percentage of that revenue to kind of stay in that same line. So what I can take from this is earnings will continue to grow in the same trend, which likely means they're going to come in ahead of this $2.63 range. So I would not doubt that this gets marked upwards, kind of revised upwards, which is ultimately a good thing. I wouldn't doubt that after the revisions to forward earnings expectations, that Aritzia trades at relatively the same valuation. Obviously, fashion companies have their risk. I mean, we can see it right here from 2022 and beyond. But overall, it's very important to focus on execution with these companies. And also, it's very important to kind of limit allocation size. With these fashion players, a lot can happen very quickly that can kind of change the narrative. We've seen that with a company like Nike. We've seen that kind of with a company like Lululemon, whereas Aritzia is kind of riding the wave right now. Obviously, never guaranteed, but I don't expect this trend to slow down very much. And the fact the company is doing this during a relatively weak macro environment, I mean, we have to look to something like GDP, which is growing in the United States. It looks strong, but the vast majority of it is coming from AI spend, data center build out, things like that. When we look on a consumer level, the consumer is really struggling, and it just is not being highlighted in these quarterly results in regards to Aritzia. They have a target market, and they are just absolutely crushing it with that target market. Now, the final thing I would imagine people are going to be asking me is, will I buy more? I would argue yes. It depends how much it opens up tomorrow. But this has been a routine addition for me for quite some time. I did sell a chunk back at the start of 2025, just rebalancing at the start of the year, trying to get my allocations in check. But I really wouldn't have any issues adding to this company at this point in time if it fit within my allocations. I'm not going to go overweight here or anything. I've been, I kind of paid the price in that regard with Canada Goose back in the day when it went through the roof for a bit. I sold off a bit, so I made some profits back, but for the most part, I held on to that one a bit too long, and I went a bit too overweight on it. But this is just going to continue to be a long-term hold for me as long as the results continue to trend upwards like this. And I'm going to be very interested to see where it opens tomorrow. Again, I'm filming this October 9th in the evening. We'll see, I'm probably going to publish this video on the 10th, and we'll see where it is price-wise. If I were to bet, I would imagine it opens 90 plus. So everybody, that's it for the video. Head down below, like the video, subscribe to the channel, and stay tuned for more great Canadian content.